So today I want to provide you guys with 3 stocks that I think are good buys in April of 2023, or at least highly consider these stocks and put them on your watch list. Now I wanted to challenge myself because I think it's very easy to pick stocks off of my own portfolio. So I picked 3 stocks that I do not have in my portfolio, and I think that's going to provide some diversity and different options than I normally put forth. So let's start off by looking at my portfolio performance, and then we'll get right to my 3 picks. Now, if we look here, I am in the green. I am almost 1% in the green. That's almost $550 in gains. And overall, the market's been pretty positive. Of course, I still have my bigger losers like 3M and Tattooed Chef, but surprisingly, Meta is coming up and it's almost in the green for me. It's only in the red, 1.67%. So this has been fun to follow these last couple weeks, and I'm happy to see myself in the green, but I do miss those days of opportunities, and I think we will have some in the future because I like to buy companies at great bargains. So if you like this type of transparency where somebody shares their portfolio, be sure to subscribe, and let's now get into the 3 stocks that I think you should buy or highly consider now in April of 2023. So the first stock I want to talk about is Pfizer. Now this is of course a healthcare pharmaceuticals company, and they sell biopharmaceuticals worldwide. They are now the largest pharmaceutical company in the world, and it's a big thanks to actually those COVID vaccinations that came out. And just to put this in perspective and show you the proof, the sales at the end of 2020 were $41.9 billion. After the shots came out and really started picking up steam at the end of 2021, their sales were $81.3 billion, almost double what they were the year before. And not only that, it continued on that trend, and at the end of 2022, they crossed the $100 billion mark in sales and came in at $100.3 billion. This was phenomenal and a big help thanks to those vaccinations. But of course now there's a big fear that there's going to be a drop in those vaccinations, which means further possible revenue decline. But I just don't think that this is going to happen, but a lot of people do. So the stock's been declining as well, and we'll be looking at that in a minute. But to put your mind at ease, and why I picked this stock and think it's still solid despite a decline in those vaccines, is that they produce currently over 316 drugs, and they have 110 drugs in the pipeline. In fact, if you go to their website, their products, they go from A to Z. There's hundreds, of course, 316 to be exact. And then you can see here the different phases of those drugs in the pipelines. So they have strong offerings and future offerings. So if we look at their stock chart, we'll see over the last year, right now they're about $40 per share. So they declined quite a bit because they were at a high of just over $55 a share, which I think is creating a great buying opportunity. Now let's talk dividends. This is a great dividend stock play because it's paying a massive 4.07% dividend yield, and it's at a very healthy, a low payout ratio of 30%. They also, over the last 4 years, 3 of those years, they've pretty much been in line or grown their dividend higher than the market median, with only 2022 where they kind of slowed down compared to the market median. But despite that, to be at 4.07% yield is phenomenal. If we look at their fundamental analysis, we'll see they're considered highly undervalued, of high quality, high growth stability, and extremely high financial health, which we'll look a little bit more into their financials here in a second. If we look at their 12-month price forecast, there is a 20.3% upside. Right now, of course, they're about $40, and this stock is predicting an average of $48.54 with a high of $75. One of the reasons why I think this stock is a great buy, because I do agree with this. Now let's look at what I deem the most important things to look at financial wise, and that's going to be what we're going to look at with all 3 companies that I'm showing you guys today. The first one is going to be a mixture of the profit margins and the returns. To me, if you have strong profit margins, strong returns, that just solidifies a very strong future. Now their profit margins in all areas are higher than the pharmaceuticals average. This is stellar, this is fantastic. And their returns, 4 out of the 6 measurements are higher than the pharmaceutical average. So again, these 2 are solid, strong measurements that this company's providing, that is showing that they have what it takes to keep growing in the future. Not to mention, let's look at their debt. All of their debt measurements are lower than the sector average, and this is what's going to provide them that maneuverability and be able to pivot if they need to, because they don't have, they're not highly leveraged, shall we say. So overall, I own in my portfolio Johnson & Johnson, another great pharmaceutical play, but this is a solid pharmaceutical company that I think has some great massive future potential, and I think it's a must buy in April 2023 if you're considering buying something in the healthcare sector, especially the pharmaceuticals. This is one that I've had on my watch list, and I would possibly add it now in April should it fall to around $35 per share. I recently sold out of AbbVie. I think Pfizer's a much better play, but I'm happy if I only hold Johnson & Johnson, but if I could also get Pfizer, I think that create a very strong pharmaceutical play in two of the best companies, in my opinion, in this area. So let's move to stock number 2. What stock do I think would be a great buy? This is a big tech company, and that is Google. Now, of course, Google is mainly known for its search engine, which provides a lot of advertisement dollars for this company. Recently, though, they've been in the news because Microsoft is beefing up Bing with its AI OpenChat GPT technology, which a lot of people are fearful of, thinking that it's going to take a massive amount of Google's market share. So let's look at that market share. Google makes up 89% of the US market share and 93.4% of the market share worldwide. What does Bing make up? Only 6.3% market share. So there you have it. I think Google is so dominant that if Bing does take any ground, it might move up to like a 10% market share, but I just think Google has what it takes to stay at the top. And not only that, Google is so much more than just searching. They have Google Cloud, which includes cybersecurity, analytics, AI. They have Google Chrome, they have Gmail, they have Google Maps, Google Photos, Google Play. They have YouTube, which we're all watching right now. They have Google Nest, they have Fitbit, they have those Pixel phones, which I don't think will take off, but they have them. And they just have a lot more, even after mentioning all these things. Once you look into Google, they do have a wide moat, and I think they have a bright, solid future, especially when those advertisement dollars start coming back in a big way that have affected not only Google, but other big stocks like Meta. So let's look at their stock chart. Right now, they're about $101 per share. Over the last year, they made it up to just over 140, so they've had a decent decline, and I think a lot of that is that a decrease in advertisement dollars, and now this Microsoft fear of them coming in and taking Google's market share in the search engine area. Let's look at their fundamental analysis. They are considered undervalued, of high quality, lower growth stability, which is going to be most of the tech stocks right now with the economy that we're going into, that we're dealing with, shall I say. And then they have higher financial health, and we'll look more into the financials in a minute. Now, if we look at their 12-month price forecast, they have a massive 28.5% upside potential. Right now, they're at that $100 per share, but they're all predicting an average of about $130 per share. And I think that I agree with this as well. I think this stock is very undervalued, and a lot of the fears are just overblown. Now, let's look at their profit margins and their returns. They have some solid profit margins. They're either in line or beating the average of the sector that they're in. And you'll see I marked 5 of the ones that they are beating the market in, as well as their returns. All the measurements in the returns are higher than the average of the sector that they're in, and that is fantastic. Let alone they have low debt. They're lowly leveraged overall and beat most these metrics when it comes to the sector average. So with Google, I think you have a financially solid company with a wide moat and some overblown fears that are creating this stock price to be depressed, which I think if you buy now, you're going to thank yourself in a year to maybe even 5 years, because I think it's going to be that quick of a turnaround to see some massive gains. And I don't think Microsoft, though they are the one that could give them some trouble, I don't think it's going to be as big of trouble as people are thinking. So I think Google is going to be a great buy in April of 2023. Now, the last company that I want to present is one that, upon my research, it's a new one that I've heard of, but the more I looked into this, the more I thought about it, the more I thought this is a solid stock play for April of 2023. It might not be a buy, but it's one you should definitely put on your watch list if you do not think it's currently a buy. So this one is Fastenal, ticker symbol FAST. It's in the industrial sector, and they're a wholesale distributor of industrial and construction supplies worldwide. They provide products for construction projects, the manufacturing market, which includes road contractors, machine repair, farmers, truckers, railroads, mining companies, schools, oil exploration, retail trades, federal, state, and local entities. So really they sell to a lot of essential businesses and entities, which I really like. Not only that, but I really think our country, the United States, and other parts of the world will have a big boom when it comes to infrastructure growth, because a lot of our roads are underdeveloped, they're falling apart, and a lot of the infrastructure in general. So I think over the next 2 to 5 decades, this will be a solid play to take part in what I think is going to be a big boom in revamping this country's infrastructure. So you'll see here, I just thought this was cool. This is definitely at their warehouse, but they have kind of a vending machine of tools. You see a lot of their products here. This is just some of them. But if we look at their stock chart, it hasn't fallen as much as the other two stocks I mentioned, but right now it's about $52.8 per share, and its high over the last year was about $60. So not that big decrease, but if we look at their dividends, it's also not the biggest dividend play either, but I will mention something I like. First off, it has a yield of 2.64%, and what I like is, yes, that payout ratio is high, but it is decreasing compared to the previous trailing 12 months. So I like the payout ratios of a company to be below 50% and definitely below 75%. So this just hit below that 75%, though I don't think it's risky. I just don't like them this high because it definitely offers some risk. But what I really like to see is they grow their dividend higher than the market median every single year over the last 4 years by a big amount. And I think that trend will continue because this company, I think, is very solid. Of course, we saw they sell to a lot of essential businesses, which means that is almost a guarantee of business for them. So if we look at their fundamental analysis, they're considered fair value right now, right in the middle of high quality, high growth stability, and slightly on the higher end of financial health. If we look at the price target over the next 12 months, it actually has almost a 5% downside. So the low target is 42, the high is 56, the average is $50.33, and right now the stock is $52.82. So yes, they have some slight downside, but what I like to look at is the long term. And speaking of that, this will help us determine how their future kind of plays out. And that's, again, the profit margins and the returns. Every single profit margin metric on here is higher than the sector average. That is phenomenal. The returns, every single one except for the very top one, which is kind of in line, is higher than the sector average. And if we look at their debt, every single metric is lower, which is good because you want a low leverage company, than the sector average. So to me, this just means a solid future. They have the foundation to keep going in a strong way, and that's why I like this play. I think, again, we're going to have an infrastructure boom, a lot of construction going on. They sell to essential businesses. They have great financials. I just think this is a great one to put at least on the watch list, if not a great time to buy now for the long term. So there you have it, the 3 stocks that I think you should buy or at least consider now in April of 2023, and that is Pfizer, Google, and Fastenal. I hope you guys like these options. I'd love to hear what you think of them because I think the first 2 obviously are pretty common out there in the YouTube world for recommendations, but that last one I think is a new one that I've never heard of, and maybe you haven't, but I'd like to hear your opinion on all 3 of these. Do you think they are good buys? Do you disagree with me? What do you think is a good deal? And so if you like this type of content, I really want to thank you guys for subscribing to my channel. I've had a lot of new people subscribe, and thank you for those that keep subscribed to my channel. I want to continue my growth and providing you guys great content. So with that said, I hope you guys have a great day, and we'll see you next time on Mark Arnold's Finance.